Hello, welcome to Stewardship's October Dail-in. If you've joined us before, welcome back, and a warm welcome to you if you're joining us for the first time. My name is Jackie, and I lead the Treasurer Services team here at Stewardship. I'll be your host on today's Dail-in. And today I will also be joined by our resident experts, Hough and Stephen Mathews, who are both senior consultants here at Stewardship. If this is your very first Dail-in with us, or if you're not fully aware of all that Stewardship do, I'm just going to tell you a little bit about us. Stewardship's vision is for the world to encounter Jesus through the generosity of his church. We seek to achieve this in three key ways: inspire greater generosity, strengthen Christian causes, and make giving easy. The purpose of today's Dail-in is to equip and encourage you in the important role you are doing within your church or charity, and by extension to strengthen the Christian causes you represent. If you'd like to find out more about how we could support your church or charity, take a look at the website or email or call John Keskes, our Head of Partnerships. His details should be on your screen right now. Please note that if you'd like to receive the follow-up materials from today's call, including the podcast recording and briefing papers, you'll need to ensure that you are signed up to the Treasurer Dail-in mailing list. If you haven't yet done so, you can find the sign-up form at www.stewardship.org.uk/Dail-in and just scroll down to the bottom of the page. Right, moving on to today's agenda, we have a number of mosquito effects for you, those small annoying things that can come back to bite us. The topics that we will be discussing are the role of policies in church life, charity accounts, the quality and future recommendations, pension issues for churches and charities, registration of charitable trusts, and some charity commission updates. And we'll then have our Q&A section to finish off the call. Thank you to those of you who have sent in your questions by email already on the topics of financial controls and paying financial gifts. This really helps us to tailor our content to your needs, and we will address these during the Q&A session. We encourage participation, so if you have any questions on the call today, please do use the chat function within Zoom to ask them, and we'll answer as many as we can during the call. In case you aren't sure how to do this, if you've joined us via the webinar today, you will see a chat icon on your screen. Click in here to type your questions. Just make sure you send these to all panelists to ensure that we see your questions and we're able to answer them. Those who have dialed in purely on your phone, I'm afraid that you won't be able to ask a question on the call, but hopefully the resources we send out afterwards will be sufficient in answering any questions you may have. Let's begin with the first item on the agenda, which is the role of policies in church life, and that's going to be brought to you by Alan.
Fabulous, thanks Jackie. Yeah, policies can be thought of as principles, if you like, or rules or guidelines that just help to set the course of the organisation that they're designed for. But often when it comes to churches, we hear time and time again comments from different church leaders such as, well, we're a church, not a business. Policies are just another way to stop us doing what we want to do. We just want to get on with the work of the church. Now, whilst those sentiments are perhaps understandable, it is often those same church leaders that run into difficulties when they encounter a situation and without a policy to follow start to make decisions on the hoof, sometimes decisions with unfortunate or perhaps even costly outcomes. So today I want to explore briefly a few aspects of the policies debate in churches. Firstly, I want to cover a little background. Secondly, look at some of the advantages that we see for churches that have good policies. And thirdly, just to decide where to start and what it is to do. So firstly, some background. Policies in churches can get a bad press, and it's easy to see why when policies are badly thought through, badly communicated, or badly implemented. However, on the other hand, sensible policies, well communicated, can set a church on the right path and serve to free up church leaders, allowing them to focus attention elsewhere. Whilst this alone may be reason enough to consider your own policies, when you add the growing expectations of the Charity Commission when it comes to charity governance, then there is even more reason to stop and think. Partly in response to recent issues with some prominent charities, the Commission is expecting greater professionalism from trustees and expects to see a robust, fit-for-purpose compliance and governance framework in place, where policies play an important part. So turning to the advantages. Here at Stewardship, we have seen how good, well-thought-through policies in churches help to meet this heightened expectation and also provide real benefit for churches. So what are some of those benefits that we see? Well, number one, policies allow for consistent and efficient decision making. As an example, when a church is presented with a grant request from missionaries now working overseas who previously were members of the church, churches without a clear grant-making policy may find it difficult to decide whether or not to support that request. With no policy setting the course, decisions made to similar requests at different times may be inconsistent and perhaps difficult to explain. Why have we supported this person but not this one? A policy allows the church to make and document a decision quickly. Secondly, feeding off the first point, a policy provides a reference point for fairness. Decisions will not be taken based on the importance or character or nature of the people involved, but on a principled approach that treats everyone the same. A policy on staff expenses, what can and can't be claimed, can avoid the embarrassing situation where an expense is presented for reimbursement for items that the trustees are uncomfortable with. Third, policies allow time for sober judgment, prayer and reflection. Time which allows for the implications and unwanted consequences of a decision to be considered and debated. Time which allows for dissenting voices to be heard. And time to test the waters. Just recently at our church, we've had to dig ourselves out of a hole after making a hasty decision in an area where we had no clear policy. 4, policies make clear to everyone what is expected and plot the course towards a sensible outcome. Clearly written and well communicated policies should serve to avoid misunderstandings. Fifthly, policies serve to protect the church and its staff and volunteers. A, by ensuring that the actions and decisions of a church are compliant with current legislation. With a growing weight of legislation coming from all directions, compliance is not always easy. Policies are not the only answer, but they can certainly help. And B, they provide transparency and accountability. Members, staff, volunteers, and in some cases outsiders as well, are able to see the way that a church seeks to operate, what it values, and what it expects of itself and others. And 6, policies tend to limit risk. For many of the reasons already mentioned, policies reduce the risk of an off-the-cuff approach where risk has not been properly factored in. So far from being the things that hinder and tie up a church, policies can be the very thing that free up church leaders. So where do we start? For churches and charities that do not have written policies, knowing where to start can seem daunting. At my own church, we're working our way through some very outdated policies and filling in some important gaps. And distinguishing the important from the urgent is not always that straightforward. So can I suggest that you think about policies split into 3 groups? Firstly, there are those areas where policies are a requirement. So these include data protection, safeguarding, especially when working with vulnerable people groups, and financial reserves. Also, depending upon your size, there may be a requirement for formal health and safety policies. Perhaps this group of policies is a good place to start. Second, consider policies that will help your church or charity run a little smoother. These might be policies that provide for easy and consistent decision making, tackle areas of contention, and ensure fairness. This group might include policies on finance, grant making, employment and expense reimbursement. And third, when you come to complete your charity's annual return, you'll be asked to select from a list those areas for which you have written policies. Whilst these policies are not yet mandatory, they serve to further demonstrate the expectations of the Charity Commission and their direction of travel. This list includes conflict of interests, managing volunteers and complaints handling. If you do not know where to start, we have produced a set of policy templates for churches to tailor and make their own. These can be found in our online shop, where we have a suite of 9 policies covering all the areas currently listed in the annual return, and available separately a comprehensive finance policy covering all aspects of operational finance. Now, I've mentioned a couple of times that policies will benefit churches and charities where they are well thought through and are well communicated. This thinking and communicating should be an ongoing process involving trustees, other church leaders, and very importantly, those workers and volunteers that will be directly impacted by the proposed policy. As a volunteer, it can be disheartening to be presented with an agreed formal policy that covers an area of church life that you're involved in, knowing that you've had little or no input into it. And remember, policies are not like your church constitution or governing documents. If you find they're not working, or if your circumstances change, then policies can be revisited, updated, or scrapped. In fact, it's a good idea to build a review process and timetable into your trustee meetings so that all policies are kept relevant and up to date. Finally, where possible, and in my experience this is most cases, make those policies widely available to any church members should they wish to read them. Most won't bother, but generally the more that we bring matters into the light, the better relationships develop between church members and church leaders. So do policies deserve their often bad press? Well, at Stewardship, we don't think so.
Thank you, Alan. That was really helpful. Now we're going over to Stephen for a look at charity accounts, the quality and future recommendations.
Thank you, Jackie. There are 3 statements from the Charity Commission relating to accounting that I want to cover today. First, a consultation feedback on the direction of travel of SORP. Second, their report on the quality of accounts. And third, their very recent comment on the quality of auditors and examiners of accounts. First, on the SORP itself. The charity SORP has been with us for around 35 years, setting out the reporting requirements for charities that report on an accruals basis. In general, it applies to all charities that are companies, all charities with income over £250,000, and any other charity that chooses to do accruals accounts. Recently, a review panel made up of members of the charity regulators looked again at the SORP, and following some sweeping observations, they made a number of recommendations to make SORP, quote unquote, fit for purpose for the next 25 years. Overall, we welcome the direction of travel, but we're yet to be convinced that comments go far enough. The problem in my mind is the complexity and associated cost that follows SORP brings to smaller charities. From our perspective, all the changes in the last 5 years means you cannot see the wood for the trees unless you're an analyst or a professional accountant. For the average reader, it is simply too cluttered with technical words and multitudes of figures large and small. One very senior charity accountant said people understand their finance until accountants get involved, and that was before the recent changes. It was good that a key recommendation was greater simplification of reporting requirements for smaller charities and better representation of small charities within the SORP committee membership. Whilst this goes some way to help with the difficulties faced by the smaller charities, we would like to see a far more reaching approach. Our preference is to increase the income limit for receipts and payments accounts from £250,000 to £500,000. No help if you're a company charity, but very helpful if not, possibly with some added safeguards. Secondly, having a SORP light for smaller charities, which cuts out a lot of the less critical figures and musts that mean there are loads of unhelpful words, possibly with some focuses on key statistics. So let's wait and see. Second, quality of accounts, and separately, quality of auditors and examiners. At the end of 2018, the Commission reported on a survey of year-end filed accounts. It said 70% met the basic benchmark, compared with last year's 74%. This 4 percentage point drop is described by the Commission as a significant deterioration. Apart from pages and dates missing, the common themes are that most of the deficient accounts provided little or no information on the charity's purposes and or the activities carried out to achieve them. So this is about the words rather than the figures. Sometimes this was coupled with other issues such as incomplete accounts, lack of an independent scrutiny report or the wrong sort, or an overall lack of transparency, which we understand to mean a lack of information on transactions with trustees and or key staff. This message was reinforced in a Charity Commission press release published on the 28th of August this year. This was very critical of the standards of external scrutiny that auditors and independent examiners were providing to charities. The Commission looked at the accounts of 296 charities across a range of turnover levels. The Commission were of the view that the findings were particularly concerning. As you might expect, the larger charities, those requiring external audit, fared best, with more than 75% meeting the benchmark. With smaller charities, with turnover of less than £250,000, they fared worst with only 37% reaching the benchmark. This is supported by findings in the report that only 18% of charities using unqualified examiners, i.e. those with no professional qualification, normally the smaller ones, met the benchmark. And the auditors were more likely to meet the benchmark than independent examiners. I think those last couple of comments emphasise the fact that the role is so much more demanding than it was only a few years ago of being an examiner, that we think this is effectively the end of volunteer or semi-volunteer examiners in the market. Now, we are trying to find out how much of these failures were technical ones, ones that don't impact most people's understanding of the accounts, or how many were real failures. Like one £600,000 gross income charity we looked at a couple of weeks ago, where the entire open inverted commas SORP accounts, close inverted commas, comprised one page of income and expenditure plus a 4-line balance sheet. No accounting policies, no notes, no restricted funds. They definitely weren't compliant. The Commission's conclusions that they wanted to get across were the following. Trustees of a significant number of charities have appointed auditors or examiners whose work does not meet the Commission's external scrutiny benchmark. Secondly, the Commission has updated its guidance, CC 31, in order to help charity trustees make the right appointments. And thirdly, they wanted to remind trustees that the report and accounts remain their responsibility, not just the external accountants. The messages we want to get across are, firstly, the same as the Commission. Secondly, but also make SORP simpler for small charities. And thirdly, to trustees and treasurers, have someone who helps to explain what the figures mean. And secondly, invest in the accounts. It is a public statement to the world of how much you value governance. Back to 2 Corinthians 8. Do what is right, not only in the eyes of God, but also of men. Thank you.
Thank you, Stephen. There's lots of food for thought there. The next item is from me, and following the abundance of questions in the last Dail-in, we're going to take a closer look at pension issues for churches and charities. This issue of workplace pensions continues to cause a headache for many employers. In fact, queries about pensions are among the most common type of question that we receive here in our payroll bureau. Auto-enrolment is a government directive which requires every employer in the UK to put their qualifying staff into a workplace pension scheme. As an employer, your responsibilities started at your staging date if your payroll is older, or at the start of your payroll if you have set it up more recently. So what are the main decisions that you will need to make? The first decision that you and your fellow trustees make is which pension. There are a range to choose from, but just make sure yours is a qualifying scheme for auto-enrolment purposes. Your pension provider should be able to confirm this. The second decision is how much to contribute. For many small churches and charities, this is another cost in an already tight budget, but do make sure you're meeting minimum requirements. For the employer, this is 3% of qualifying earnings, these being gross pay less the lower earnings limit, which is currently £512 per month. So if Rachel Smith joins your staff at a salary of £12,000 per year, her monthly gross income is £1,000. We deduct 512 and calculate the 3% employer contribution on the remaining 488. And this gives a monthly contribution of £14.64. Be aware, though, that the minimum total contributions are 8%. This means that if you are only paying the required 3%, your employee must make up the remaining 5%. If you're more generous, then they can pay less. For example, if you pay 6%, your employee will only need to pay 2%. As long as your total is the 8% minimum, then you're meeting legal requirements. However, there is a difference between how much we must contribute and how much we should contribute. We find that a great many of our clients choose to be more generous than the statutory minimums, with some paying the full 8% or even 10% as an employer contribution. So the third question to consider is who to enrol. Well, this is everyone earning over £833.33 per month and aged between 22 and the state retirement age, and basically anyone else who wishes to join. Assuming Rachel, in our example before, is over 22 years old, since she earns over £833.33 per month, she will need to be enrolled in your pension scheme. Let's imagine David Jones also joins your staff. He earns £832 a month, which is below the threshold for auto-enrolment. So he therefore does not need to be automatically enrolled in your pension scheme. but he must be offered the chance to opt in. If he doesn't choose to do so, no further action is needed. However, if he does wish to join, then he will be subject to the same contribution levels as Rachel, as he earns more than £512 a month. If he was earning less, then you would not be obliged to pay employer contributions unless you chose to do so. Do remember to communicate with your employees around your pension obligations and their pension choices. The pensions regulator do have some useful templates that you can use for this. So what do you actually have to do for pension re-enrolment? Well, after your original auto-enrolment, you get to experience the delights of re-enrolment every 3 years. Technically, this should be a lot easier as you've already made your decisions regarding your pension scheme and contribution levels. The pensions regulator very kindly give you a choice within a 6-month window for your re-enrolment date, but the majority of employers just use the anniversary of their staging date for simplicity. So this time around, you need only re-enroll any employees earning over the threshold if they opted out more than a year ago. If they opted out more recently, then no action needs to be taken for them. Any who are re-enrolled can opt out again if they choose. But if you use a payroll service or bureau, don't forget to update them with details of employees who are joining or leaving your pension scheme. We get asked a lot of questions about the declaration of compliance, or the redeclaration of compliance if you're going round again. Do I have to complete it? Well, yes, you do. When? Well, within 5 months of your staging date anniversary. What happens if I don't? The pensions regulator apply financial penalties. These are currently fixed at £400, but they can be escalated. Completing the declaration is a fairly straightforward process. They send you a letter, you just follow the link online, and they ask you questions about your pension scheme, how many staff you have, how many were enrolled, and then you just confirm. Is there anything else you need to look out for? Well, yes, there is. Do look out when making pay increases. If any of your employees go over the threshold, they will need to be enrolled. Similarly, when anyone reaches their 22nd birthday, depending on their income, they may need to be enrolled in your pension scheme. Also, watch out for overtime and bonuses. If our employee, David Jones, receives extra pay that takes him over the threshold, he will also need to be enrolled, unless you apply the 3-month postponement period. You do not need to make changes to any employments who reach the state retirement age unless they request it. And finally, another common question relates to whether you can use an employee's personal pension scheme. The answer is usually not. It's extremely rare for a personal pension scheme to qualify as a pension for auto-enrolment purposes. Your employee should check with their pension provider and give you written confirmation before you assume that their pension will fulfill your legal obligations. And of course, it can only be used for the one employee. If you do choose to pay into your employee's personal pension, you will need to make sure that you still enroll them in a qualifying scheme as previously described so that they can opt out. So if you have any more questions which aren't covered here, feel free to ask us, or you can check out the pension regulator's website, which is full of information. And don't forget, if you want to ask your questions on the call today, you simply need to click on that chat icon on your screen, select all panelists and type in your question. Our next mosquito effect is brought to us by Stephen, who will give us an update on the registration of charitable trusts.
Thank you. This mosquito is entitled "There May Be Trouble Ahead." When Irving Berlin penned the lyrics of this song, he wasn't thinking about the burden of regulation, but the words are strangely appropriate to changes due in under 18 months' time. The song goes on: "Before the fiddlers have fled, before they ask us to pay the bill, and while we still have the chance, let's face the music and dance." This mosquito seeks to prepare us all so that we can face the music and dance rather than have to pay a bill for being unaware of or ignoring the trouble ahead. So what is this foreboding for charities, I hear you ask? It is the government's implementation of the EU's 5th money laundering directive, which requires a trusts register to be established no later than the 10th of March 2020. It looks as if all UK trusts, including charities, will have to register with the Trusts Registration Service, provide certain data on their charity and keep that data up to date on pain of penalties, whether for late registration or for not updating the register. But there are different opinions on whether companies may have to be in some way, or even whether charities really will be involved. At the moment, we just don't know. What data is going to be required? Well, Some of the language used may be unfamiliar, and application of it to charitable trusts may be challenging. And at this point, there is a lot that is unclear. We hope there will be good HMRC guidance because this will be essential. In relation to each trust, the directive requires details of the settlor, trustees, and any other natural person exercising effective control of the trust, class of beneficiaries, and for each individual in the above list, their full name, date of birth, nationality, country of residence, and the nature of the individual's role in relation to the trust. The government may wish to collect, for example, national insurance or passport numbers. Deadlines. The current government proposal is that the charities already in existence on the 10th of March 2020, the formation date of the Trust Registration Service, they have a registration deadline of 31 March 2021, so just over 12 months after that. For new charities after the 10th of March 2020, their deadline is 30 days after creation, usually as part of the registration process. With changes to the data, such as on a change in trustee or contact details, within 30 days of the change. It will massively simplify things for all concerned if the charity can
we have time for today. Apologies to you if you've asked a question and we didn't have time to answer it on the call. The material sent out in the follow-up email should hopefully answer any remaining questions, but if there's still something you'd like to ask after you've had a read through, then please do get in contact. And we had a couple of questions around whether the slides will be available afterwards. They will indeed be sent out with a follow-up email, so you can have a look at those as well. Also included in the follow-up email is a very, very brief survey that should take a maximum of 3 minutes to complete. I'm sure that your inbox is full of them. However, we're currently reviewing how best we can allocate our resources in supporting churches and charities, so it's particularly helpful at this time if you can let us know what you think of this service. We'd like to know what we're doing well and whether there is anything else you'd like us to include. Ultimately, we're here to serve you, so really appreciate you taking the time to help us in this way. Our next Dail-in will be on Thursday, the 13th of February 2020, and we'll be sending you the details for it shortly. We hope you'll be available to join us, and please feel free to invite anyone who may be interested. We are keen to address the issues that directly concern you in your roles, so thank you to those of you who sent in your questions prior to the call today. We'll be inviting you to do the same for February, so do look out for details on how to send your questions in. Remember, if you'd like to receive the follow-up materials from today's call, including the podcast recording and briefing papers mentioned, just make sure that you're signed up for the Treasurer Dail-in mailing list at www.stewardship.org.uk/Dail-in and scroll down to the bottom of the page. And now it just remains to say a huge thank you to everyone that has participated in the call today. Alan and Stephen, thank you for answering so many questions and delivering such helpful information. And thanks to all of you for dialing in today. We hope you'll join us on our next call.